You guys, the market is in extreme fear over the tariff news that's set to go into effect today. People are expecting a crash, capitulation, you name it. I haven't seen this bearish sentiment in months. But here's the thing, guys, this announcement is not new. It has been on the calendar for weeks. And what we know is that when markets know something is coming, it's already priced in. Hello everyone, and welcome back to the DataDash channel. My name is Cassie, and some of you may know me as Cassie Trades over on X, where I share what I've learned over the last 10 years analyzing and trading the crypto markets. So if you're not doing so already, make sure to give me a follow over there. So while everyone is in extreme fear and on the sidelines, the charts are telling a very different story. We have Bitcoin still holding beautifully at support, and Ethereum just saw a massive institutional buy with Fidelity yesterday, and XRP creating a beautiful bullish divergence on the RSI. So today we are going to cut through the fear, get to the facts. We are going to take a look at Bitcoin, Ethereum, and then end it with XRP, get into what to expect in the days ahead. So let's get right into it. All right, you guys, so I have Bitcoin on the hourly chart pulled up here. And what you can see here mapped out is the Elliott wave count that I think that we're on. And I think that Bitcoin is coming up for a B wave up to that 93,000 area. So that 93,000 price is the 0.5 retracement on Bitcoin, the Fibonacci retracement, as well as an extension for a C of B. So we are getting confluence here on our subwaves as well as our larger degree B wave landing up towards this 93,000 area. So I do think that Bitcoin is on its way up to that area there. And that's going to be a very critical level to watch for Bitcoin. What you can see mapped out here is I do think that we are going to find resistance at that price and come down for new fresh lows in this correction, possibly down to 60,000, even high 50,000 area if we do see the resistance at 93,000 that I think that we're going to. So in an Elliott wave theory B wave, this is a corrective pattern. So a corrective pattern can either make typically an ABCDE, which is a triangle, or an ABC pattern. And I have the ABC pattern marked out here. And just with development, that is so far what has been developing from what I can see in ABC. And we've just come down for that subwave B of B, landing perfectly at that Fibonacci golden retracement level there at 81,300. So you can see here just how nicely it respected that golden retracement. And I think we are on our C wave of B coming up to those critical levels there. So right now I do have confluence. We have alignment at 93,000 being a potential resistance. But this B wave could come up all the way and not make a new high and still be valid for that new low later on for C. But I do think we will find resistance right here at this 93,000 or even up towards 96,000. That would be the 618 Fibonacci retracement on Bitcoin. It is possible that the B does come up that high and we come down for a C. But I think that with our alignments of the subwaves and our larger degree B target at 0.5, I do think we're going to see resistance at 93,000. So keep an eye on that as we start to come up on Bitcoin. So I'm going to zoom out a little bit here, and then we'll take a look at that C wave, just so you can see what I'm expecting on the macro picture here, because we are a little bit more zoomed in here. Okay, you guys, so what I really want you to take away from this picture here is we have Bitcoin coming up to a 5 of 5, hitting massive resistance at the all-time high, and since then starting a correction. So we're now zoomed out to that pattern that we were just a little bit ago, and you can see here we have our, from all-time high, we have the A wave coming down, and then we're in that B wave coming up that I believe we're on, finding resistance at 93,000 up towards 96,000 area. It just can't make a new high to be valid for B. If we make a new high, then it is no longer a correction at that point. But if we do come up to these textbook resistance here that I have measured out, then our C wave is down here, making a new low towards that 62,000 price area. So that's a 1 of 1 extension. That's the textbook target for the C wave for Elliott wave theory. But it could even come down to an extended C wave down towards 54,000. So this would be the correction that we would be expecting on Bitcoin after reaching 5 of 5 waves in a market cycle like Bitcoin has. And I don't think that this is true for alts. I think that altcoins are on a different phase in their market cycle. So we'll get a little bit into what those look like next. But overall, I think this is what is still playing out on Bitcoin. So we were just zoomed in a little bit on that B wave, and this is zoomed out a little bit, showing you how after we find resistance there, we could come down to new fresh lows, and we need to be prepared for that there. So I have that mapped out, and we'll be ready, and we'll be tracking that as it goes, as the weeks go along. So I do think short term we are coming up for a little bit of a relief, and that could really help our altcoins give a little bit of life to them, because they need it. Like I said, altcoins have not seen wave 5 of 5 up yet like Bitcoin has. So it is time for them now in their market cycle to start completing some impulses because we've been waiting a while on a lot of those. So let's get into Ethereum and take a look at what Ethereum looks like. Like I mentioned earlier, it did get that massive Fidelity buy. So let's see if Fidelity actually bought as support or if it could go a little bit lower. So let's take a look at Ethereum. All right, you guys, so I have Ethereum on the daily chart pulled up here, and there are several things that I want to point out to you guys. So this is that high that has been tracking since that 4,100 area, that double top that it had, and since just has come down with this massive wave down. But what we are seeing now as it's approaching this 786 Fibonacci retracement level is we are getting a bullish divergence on the RSI. So as I've said in other videos, this means as price is coming down to make new lows, our selling is really getting exhausted. And this is what we look for a potential pivot in the market, as a signal for a pivot in the market. So what this could mean is that Ethereum could come down and perfectly touch this support here, the 786 at 1,720, still holding our bullish divergence there, and really start to come up for that new trend that we're expecting. So this is a very good sign that on the daily time frame, we are building out this bullish divergence here that has not yet played out on price. And overall, we are very close to support. So we could come down, touch this support perfectly at 1720. But if we start to get bullish and really play out this divergence early, a good, strong confirmation of bullishness on Ethereum would be breaking up above this golden retracement level here. So as I've mentioned in other videos, this golden retracement is a very critical, one of the most critical, actually the most critical retracement level in a fib set. So we are currently sitting below that on Ethereum. So a good confirmation would be breaking above that and really breaking that market structure. So that's at 2,230. If we can break above that price, that will be really good sign on Ethereum. So did Fidelity make a good buy? I think so. I think that they definitely were waiting for that bullish divergence to appear on the RSI here. Maybe they have a little bit more waiting to average out here if it does come to support. But I think overall they did okay on their buy here. Look how long it has just been trending and making new lows after new lows on Ethereum. I think it really is ready for that new trend. So since we're zoomed in here a little bit, let's step back out even more so you can just get a little bit more of a context of what we're looking at on Ethereum and really what the trend has not been in the last several weeks. So I'm just stepped way back here on the weekly time frame, and this is just from the very beginning of Ethereum over here. So we have that massive wave 3 up, massive wave 4 down, and then this just really weird pattern since. So you can see I was tracking it as a wave 5 that would complete its own 5 waves up, which could essentially be something maybe like this, but it should come up and make a new high. But these subwaves are really strange to me. So at this point here, I really would have expected it to continue up to our wave 5 high there at 5,000. But you can see that just massive rejection there. The RSI also created a massive bearish divergence. Once we had that second touch there, you can see just how much lower our strength was here on that touch. So that's a massive bearish divergence, a massive signal that we're going to come down from there. And this is on the weekly time frame. So very good indication we are going to come down from there. It's just when it comes to the patterns of this wave 5, it doesn't make sense that we were coming down from there. But we'll take it. And since then, over here, in December, we have just had to be flexible, right, and see what the market is giving us. Obviously, for market structure, we really would have wanted it to hold this golden retracement here for several reasons, just being how critical that golden retracement is. And in Elliott wave theory, we would not want it breaking below this first high here, which is considered a wave 1. That breaks market structure as well. And you can see it did break into wave 1 and had a lot of closes into wave 1. So the subwave count of this wave 5 is suggestive, and I'm not adding too much weight to the subwave count there. So what I am looking at is the fib retracements that it's reaching, that bullish divergence that we are seeing on the daily time frame, and then our larger extension targets. So we are still targeting this 5,000 area here in a new high on Ethereum. So good time to be buying for Fidelity, pretty much at support here and getting good signs of above it here on Ethereum. So now let's get into XRP. So the case was dismissed. We've had all this reserve news, and XRP is still sitting and fighting those $2 price levels. So let's get into XRP and really see what could be next in the coming days for that altcoin. All right, you guys, I have the XRP 1 hour chart pulled up here. And again, several things I want to discuss on this chart. So it does look a little bit daunting right when you first look at it. I now have vertical lines on my chart. So I'm going to explain all of these as best I can for you. So nothing has changed as far as the 3 tools that I use. So what you're seeing on this chart is Fibonacci retracements and extensions, Elliott wave counts, and then I do have Fibonacci time zones added into here. So we'll get into that as well. So overall, with the Elliott wave count, I do think that we could be on a large wave 3 up on XRP. And this wave 3 is targeting testing the previous all-time high of $3.80. And that is going to be a very critical level. If we do find resistance there, we would start to come down for a 60% correction from there. But if we do get the strength and momentum to break all-time high, I think the XRP could be hitting new all-time highs very quickly. So this is what I think that we're on. In order to invalidate this count, we would need to start to make new lows. So you can see I have my subwave 2 count here at $1.90. And then we have wave 1 beginning all the way back at February 3. That was at $1.70. So these levels are really critical to hold for this plan. If we do break below those lows, we would need to get reset on our account, and it would target somewhere near $1.54 for support on XRP. But I do think so far we're following this plan. This massive wave 3 coming up should break down into its own 5 waves. And what I think we could be seeing with this last wave down here to support here was our wave 2 of that wave 3. So that would mean we could be seeing our wave 3 of 3 next. And that is the most explosive wave out of all of the market cycle. So you definitely want to be paying attention to XRP amongst other alts that are in a similar market cycle as XRP. So what you're seeing here right now in that subwave 2, I believe, is XRP coming down to that 786 Fibonacci retracement level. And you can see just how nicely it has reached that with price and started to build that bullish divergence on the RSI that we're always looking for that signal for a pivot, just like on Ethereum. So from this bullish divergence here, we did get a little bit of a test of our 217 resistance area, and it could not hold that. So with that, it is possible to still come down to that psychological $2 area to test, even $1.90 if we start to get really bearish. But on the bullish scenario, if we can break back above this golden retracement here, that 217, if we can break back above there, that will give us the confirmation that we need that the market structure is now flipped and we are on to a new trend. So like I said, we could be on that wave 3 of 3 next and ultimately testing previous all-time highs here on XRP. So I definitely think that altcoins are in a very different phase of their market cycle than Bitcoin, but it will rhyme, meaning they'll start to come up at the same time. They'll be on bullish waves at the same time and bearish waves at the same time, but they're going to be targeting different levels where altcoins could be making new highs and Bitcoin may not make new highs on this next run. So let's see what happens. This is what I'm expecting in the coming days. So another thing I want to mention about XRP is this Fibonacci time zone here. So this Fibonacci time zone started right at the beginning of the month here, and we are now into Fibonacci time zone 3. So the Fibonacci time zones help us break down that market cycle and help us give our proportions right as we start to analyze the market as it's developing. So what this means on XRP is that it's now entering its bullish market phase of its market cycle, and this is projected to last the entire month of April, hitting a high on April 25. So this is really interesting how we can use Fibonacci retracements for price, but in a similar way use the same set of tools for time. So that's what you see here, and XRP has now entered that Fibonacci time zone 3 lasting all of April. So I'm excited to see what happens on XRP for April. Like I said, April 25 kind of marks a high in that Fibonacci time zone. So between there is where we could really start to see that wave 3 of 3 build that I've been talking about. And that's it for today's video, guys. Thank you so much for watching. If you enjoyed it, make sure to give this video a like and subscribe to the DataDash channel. And remember, if you need to cut through the fear and the noise that the headlines are providing, learning TA and learning how to chart is the best way to do that. So make sure you're following along for future technical analysis videos just like this one. Thank you guys, and have a great rest of your week.